Greetings, and welcome to the High Flying Tutors Academy channel. I'm going to help you with the company's question, where we are going to prepare a general journal, and in the general journal, we're going to record transactions where you are paying tax, where you are selling shares, where there is application of shares, and where there is declaration of dividends. So we are going to have this question. We're going to analyze the question first and try to make things easier, right? So let's see. We are given a question in Mboma Limited, and we also have our answer sheet on the other side. And then we also have our working sheet and calculation sheet, right? So we are going to be working on these three sheets. So, but firstly, we need to go through the question. We need to go through the question and then we'll take it from there, right? So let's see what is happening here, right? Let's see what is happening on this question. They say Boma Limited question. Boma Limited was incorporated with an authorized share capital of 350,000 no par value ordinary shares, 100,000 15% preference shares, and then you also have 50,000 12% preference shares. And then I'm gonna start by trying to explain what is authorized shares, or what are authorized shares. Let's start there before we are going to be confused and all of that. Let's start there. What are authorized shares? So how I explain it is that the authorized shares are the stock of shares that are in the business, the number of stock of shares that are in the business that the business is going to offer or issue to the public, right? So this is the stock we have of shares. All right, I hope you get this one. And then let's proceed. They say the following balances were inter alia obtained from the records as at 31st December 2009. And then they gave you share capital, ordinary shares issued at R1.75 each, with an amount of 350,000. And then we've got share capital, 15% preference shares issued at R2 each, 160,000 rand. We've got retained earnings of 55,000. We also have Sars, 5,000, right? So look here, these shares are already issued from the previous year, right? So when we open with an issued shares from the stock. Remember, when we issue from the stock we have. I want you to get the point as we go with the question, so that when we record, you understand what we are really doing. All right. So we already sold some of the stock of shares that we had when we incorporated or established the company, right? So let's proceed. Now they say the following transactions took place during 2010, February 25, paid the amount of income tax due to Sars. All right, and then 31st August made the first provisional tax payment by check number 685, 14,500. On the 3rd of September, we offered the remaining 15% preference shares to the public at R2 each. September 25, applications for 30,000 number of shares, 15% preference shares were received. The maximum number of shares were allotted and the unsuccessful applicants were refunded. And then on the 31st of December, On the 31st of December, you make a provision for income tax for the period 25,000, and then this is another transaction there. There's two transactions in this that that took place on the 31st there, where we have we've made a provision for income tax for the period, and the directors declared and paid final dividends of 5 cents per ordinary share and 15% preference shares to all registered shareholders on the 31st of December 2010, right? So let's see, you are required to prepare the necessary entries for the above mentioned transactions in the General Journal of Boma Limited. And dividends NB, dividends withholding tax, dividends withholding tax is 20%, dividends withholding tax is 20%, right? So now we need to go and record all these transactions that took place in 2010 in the General Journal, right? So number one, let's start with the first transaction that happened on the 25th of February. They say you paid the amount of income tax due to Sars. This income tax was due to Sars from the previous year, which is on this date, you see? Right, so on this date, this is the previous year things, right? So you were owing Sars 5,000 right there. You were owing Sars 5,000, so you need to record. So when you pay, you just have to record in the General Journal right there. So date, I'm just gonna say Feb 25. Let me just create a space right there so that they can be order here. Right, then you are paying Sars. Remember, you are paying Sars, and Sars is a liability, and when liabilities, when you pay them, they are decreasing, and liability decreases on the debit side. So it means on the debit side, you are going to debit Sars. You're going to debit Sars. All right. Maybe you can say in bracket income tax. Income tax. Income tax right there, you debit income tax, and then on the credit side, because you are making a payment, you're gonna say bank, right? Bank. So you see, I have debited this and I've credited this. Do not find your things making a queue following each other right there. So please make sure okay, let me just do this. Right, so as I was trying to explain before, I say, you see, I've debited I've debited Sars income tax, and I've credited bank, because we don't want to find your things making a queue following one another, because once you put everything in one line, it means maybe you are debiting. So if you put bank there, you'll be debiting the bank, right? So at least it must go to the right a bit, just to show that you are crediting the bank, right? And then, because you don't want to find yourself losing marks on this, and then how much did you pay? You paid 5,000, so you're gonna debit 5,000 right there. You're gonna debit 5,000 rand right there, and credit 5,000 rand right there. Right, so that is your first transaction. And then what is your narrating? You must narrate, because most of the time they want you to narrate in a question like this. They want you to narrate on the transaction that you have recorded. So when you narrate, just say payment of income tax due to Sars. Payment of income tax due to Sars. Payment made, or we can say payment of income tax due to Sars. Right? Payment of income tax due to Sars. Okay? And then that is your narration right there. That is your narration right there. Payment of income tax due to Sars. And then you are done with the first transaction. This is how you record the first transaction. Right? And then let's go to the next transaction. Let's go to the next transaction. The next transaction happened on the 31st of August. Made the first provisional tax payment by check number 685, 14,500, right? So you have paid first provisional tax. That means you are paying to Sars. Always when you pay Sars, you are decreasing a liability. You are decreasing a liability. Always when you pay Sars, you are decreasing a liability, right? So when you record this one, you're gonna say on the date right there, August 31st, you are going to debit Sars because you are paying this to Sars. You're gonna debit Sars in brackets. You're gonna say provisional tax. Provisional tax, right? Provisional tax. And then because you are paying this to Sars, right? And then you're gonna credit what? Bank, because you are also making a payment. Remember, bank is an asset, and whenever asset decreases because we are making a payment, you credit. So you debit Sars, you credit bank, right? With how much you have paid? Let's see, you have paid 14,500, right? So let's go and record this one. 14,500 from this side, 14,500, right? And then narration, you can say first provisional tax payment. First provisional tax payment. First provisional tax payment, right? And then that is your narration, first provisional tax payment, or you can say first provisional tax paid, right? No problem, you can narrate like that, right? And then let's go to the next transaction. This is how you record transaction number 2 that happened on the 31st of August, all right? And then transaction number 3, they say to you, on the 3rd of September, we offered the remaining 15% preference shares to the public at R2 each. But remember, in this case, remember, this remaining shares, they cannot be, they are not allocated, or they are not given to anyone. They are there to be issued. So this transaction number 3, we cannot record it until we receive an application. So we always have to start with the application, then we allocate, then we refund if there's if they applied more than what we are offering. We refund what we cannot offer, or what we cannot allocate to the people, right? So remember, in terms of this, you need to know that you cannot record the offering of shares without receiving an application. So you need to start with the application and allotment, and then secondly, you will allocate, then you will refund. Remember. So now I want us to go and look at this. Remember, they even did not give you the remaining shares. They did not give you the remaining shares. They just told you we have offered the remaining 15% preference shares to the public at R2 each. Right? So now we cannot offer, or we cannot issue, or we cannot allocate before we receive an application. Therefore, the following transaction on September 25, we received an application. You see now, they say applications for 30,000 15% preference shares were received. The maximum number of shares were allotted and the unsuccessful applicants were refunded, right? So we have refunded the unsuccessful applicants. So now, number one, we need to record the application, right? We need to record the application, and then we can offer after, and then we can refund after. Okay, so now I want us to go and record the application of shares. Remember, each share R2. All right, so let's go and record the application and allotment. So this is the transaction that happened in September. This is the transaction that happened on September 25. All right. Okay. All right. And then now we need to record what? The application. So when we record the application of shares, we are going to say application. We are going to debit bank first, because when they apply with money. That's the first thing. Sorry. We have to debit the bank because we have received the money for the application of shares. So we are going to say debit bank, right? Debit bank. And then we're going to credit, remember, we're going to credit application and allotment. Application and allotment. Application and allotment. And then application and allotment. And then we can just do calculations in brackets right there to say they've applied for 30,000 number of shares. 30,000 number of shares, we multiply by the R2 per share, which is the price per share, right? And then how much right there? How much right there? So I got 60,000 rent, 60,000 rent, okay? And then 60,000 rent even there, 60,000 rent even right there. And then now we need to narrate first before we proceed. We need to narrate. When we narrate, we're gonna say received application. Received application and monies, because we also received the money. Received application and monies. So you receive the application of shares and the money, because when they apply to buy shares with the money. They don't just send the application letter only, right? So you can just say received application and monies, right? And then we proceed because we have got quite a few transactions to do there. Number two, we are going to record the allocation of shares. But before we record the allocation of shares, we need to know how many number of 15% preference shares were remaining. Because remember, they say to you, you have offered, or you are offering to allocate or to issue the remaining, right? How are we going to get the remaining? We're going to take the stock that we had minus the stock that we have sold the previous year, and then we check how much is the remaining. But remember, if you check here, we don't have the number of shares. We have the rent value for the shares issued from the previous year. So we need to calculate the number of shares that were sold, right? So let's go to our workings. We're going to calculate the 15% number of shares remaining. %, preference, number of shares remaining, right? So now let's go there, right? So now, for us to calculate the number of shares remaining, firstly we need to calculate the number of shares that were already sold or issued, right, from the previous year. So the transaction tells us that, or the information we have up there tells us that we issued shares £2 each for 160,000, right? So for us to calculate the remaining shares, what we must do, step number one, right? We have to calculate the number of shares that were issued last year. So issued shares from last year. Issued number of shares from previous year, 2009, right? So let's do that calculation for the number of shares issued from previous year. So we're going to say the rent value, which is 160,000. Remember, we divide by 2 rand. We divide by 2 rand, right? How much are you having right there? How much are you getting? How many is the number of shares? That's how we calculate the number of shares. We are converting the rent value into the number now of shares, right? So it's gonna be 160,000 divided by 2 rand. So I'm getting 80,000 number of shares. 80,000. This is the number of shares they issued from last year. 80,000 number of shares. 80,000 shares. Right? Okay, now let's proceed. Then we are going to calculate what? Now we are going straight to the number of shares remaining. Number 2. Step number 2 there. We are calculating what? Shares remaining. Number of shares remaining. Shares remaining. So your shares remaining is going to be the stock of shares that you had from the beginning when you opened or incorporated the business, which is 100,000, right? So total number of shares in stock, which is going to be 100,000 number of shares, you less the issued from the previous year, which is 80,000, right? And then how many shares are remaining? 100,000 minus 80,000, there is 20,000 number of shares remaining, right? So now we have the remaining number of shares, right? We have got the remaining number of shares, which is 20,000. That is what we are allocating to the public. That is what we are going to allocate to the people who have applied for this share. So when we offer, we are going to debit. We're going to debit application and allotment, and we credit share capital. So now let's do so. So when we allocate, we debit application and allotment. No, what did I say? Yes, we debit application and allotment. Application, I want to make sure. application and allotment, right? And then you're gonna credit 15% preference share capital, right? Or you can just say share capital. You're gonna credit. You're gonna credit, you need the proper space. You're gonna credit share capital. Remember, this is very important. Don't even debit without having this share capital. Credit without having this share capital. So share capital, and then 15% preference. Right? So, or you can say 15% preference share capital, 15% preference share capital, right? You can do it like this, or maybe it sounds better, ne? When we say, let's see, when we say debit 15%, let's see, 15% preference share capital. Sometimes English is not our mother tongue again, so we're just trying to do things proper. So 15% preference share capital. Remember, do not come and say 15% preference share. This capital is needed. It is very, very important, right? Because now you are transferring that application or those shares into capital, into ownership, right? So now, when you allocate, you debit application and allotment, and then you credit 15% preference share capital. So if it was ordinary shares, you're going to say ordinary share capital, right? So you get my point. So let's proceed. And then now you need to do calculations. Remember, you offered 20,000, which is the remaining that we calculated on our worksheet here. We are going to allocate the remaining, right, that you have offered. So you come this side and open brackets, you say 20,000 number of shares. You multiply by 2 rand. Multiply by 2 rand right there. And then how much did you allocate for? You allocated for 40,000. 40,000. Right? Okay. And then from there you are done with allocation. So when you narrate allocation of shares to shareholders, this is allocation, narration, allocation, allocation of shares to shareholders, allocation of shares to shareholders, right? You have allocated. Now remember, they've applied for 30, isn't it? And you have they've applied for 30 and you have allocated 20. That's what you can allocate because you're out of stock now, because you had 100,000 number of shares. You issued 80 last year. Now you are remaining with 20. And then the other 10 that you cannot offer, you refund. Or the other 10 that you cannot allocate, you refund, right? So when you record the refund, you're gonna debit the application and allotment. Application and allotment. Application and allotment. And then you're gonna credit bank because you are paying back bank, right? And then you're gonna, let's do the calculation. So they applied for 30. They applied for 30 and you offered 20. It means remaining that you are refunding. Remember, multiply by 2 rand. Multiply by 2 rand. Remember, where does this 10 come from? This 10 comes from here, where they applied for 30. They said unsuccessful applicants refunded, so we have to refund the unsuccessful applicants. So they applied for 30, and we only offered the remaining, which is 20. So we are going to refund the 10 number of shares, the amount for 10 number of shares that we could not allocate, that we don't have out of stock, right? So let's see there. So it's going to be 20,000, right? 20,000. 20,000. All right. And then we are done. So when you narrate on this one, you're going to say refund to unsuccessful applicants. Refund to unsuccessful applicant. Then you are done. Remember, always, all the time, no matter how the transaction can come, like here they say that you offered, then they applied after. But remember, you cannot allocate before they apply, because who are you allocating to? So you need to have that in mind, that when you allocate, make sure that you have recorded the application, you've got the application, then you offer or allocate, and then you refund if there is a need for refund, right? So we are done with that transaction. And then let's go to the next transaction. The next transaction, they say on the 31st of December, make a provision for income tax for the period. So here you did not pay tax, you made a provision, meaning you are owing Sars 25,000. You are owing Sars 25,000. So when you owe Sars, you debit. Let's go and record this one quickly. Remember, is the 31st of December. 31st of December, right? You debit income tax. Income tax, and then you credit Sars. Right? So this is how you record when you are making a provision, because you do not make a payment. You are owing Sars 25,000. So 25,000 there, and then 25,000 right there. Okay. And then we are done with this one. So when you narrate, you can say provision for income tax. Provision for income tax. Provision for income tax. Then you are done. That is your narration. You have narrated that way. Okay. And then you are done with that one. Now you go to the next one. The next one is again on the 31st. So December 31st, the one of the declaration of dividends. Declaration of dividends. All right. So declaration of dividends and payment. So number one, let's go back to the transaction first. Just want to explain some other stuff. And then they say the directors declared and paid final dividends of 5 cents per ordinary share, and the 15% preference shares to all registered shareholders on the 31st of December 2010. So this is how I record, and this is how I believe it can help you to clear all of this. So now we are going to record the declaration of shares. Number one, you must record, we're going to record the declaration and the payment of dividends. So number one, you are going to record the declaration first. All right. So we're going to record the declaration first. So let's go there. When you record the declaration first, you are going to debit ordinary dividends, for ordinary share dividends, ordinary share dividend, and then you credit shareholders for dividends. Shareholders for dividends. Remember, shareholders for dividends, it's a liability, right? And then you're also gonna credit. You're also gonna credit withholding tax. Withholding tax. Withholding tax, right? And then we go to the next step. The next step is preference, 15%, right? Again, we're paying for the one that we've issued. We're paying for the one that we've issued, so it's gonna be 15% preference. Dividends. Right? And then you're gonna credit the same stuff, this one's here. Okay, I'm gonna go just copy that one quickly, paste. Right, so you see now, and then we will pay after. We are going to have to pay, right? Because they said we paid. So this is what we are going to pay. So this is the, then we need to narrate again right there. So let's see. And then for this one, right? So now remember, this is how you record the declaration of dividends. This is how you record the declaration of dividends for all the shares, you see. Now I want us to proceed from there. How do we pay? How do we declare dividends? How do we record this? So remember, you calculate the dividends based on the number of shares issued, based on the shares issued, not number, but based on the shares issued. So now I want us to calculate dividends. Dividends. So dividends. So when we calculate the dividends, now we're going, number one, let's start with ordinary dividends. Number one, ordinary dividends is based on the number of shares issued. So number one, ordinary dividends is calculated based on the number of shares issued, right? So how are we going to get this number of shares issued? That is our number one task right there. We need to calculate the number of shares issued for ordinary shares, right? So let's go to our question. Remember, during the year of 2010, we've never issued any shares. So different for ordinary, right? I mean, for ordinary, we've never issued any shares for ordinary shares. So we're going to use the ones that were issued from the previous year. But now remember, we don't have the number of shares. We have the rent value. So how do we calculate the number of shares? We're going to say 350,000 rent divided by 175. Let's go and do that and get the number of shares. Number of shares issued for ordinary is going to be 350,000 rent, right? Just to make it clear. And then you divide by price per share, which is R1.75. How much are you getting right there quickly? Let's see. Let's put that on our calculator and see how much we are going to get. And then it's going to be 350 123 divided by 1 rand 75. And then I'm getting 200,000 number of shares for ordinary shares, right? 200,000 ordinary shares. These are the number of shares that we have issued, and we need to go and use them to calculate our ordinary share dividends, right? So for us to calculate dividends, we are going to say, I'm going to just put brackets here just to indicate the calculation. Put brackets. So we are going to have 200,000 number of shares. Actually, let me put them here so that they can be order with better understanding. I'll put brackets there, 200,000, right? We're going to multiply by the 5 cents. 5 cents, that is on the question. Remember, they said to us on the question, directors declared and paid final dividends of 5 cents. So I'm going to multiply by this 5 cents for us to calculate ordinary share dividends, right? So let's go there. And then it's going to be 5 cents. So 5 cents is 0.05, right? So 0.5 is 50 cents. Are you with me? So don't use 0.5, use 0.05. And then now, how much are you getting right there? Let's see. It's going to be 200,000 number of shares. Remember, in ordinary shares, we use the number of shares multiplied by the price per share for dividends, which is 5 cents, right? So it's going to be 200,000 number of shares. You multiply by 0.05. And then I'm getting 10,000 rand number of shares. 10,000 rand for dividends. 10,000 rand, 10,000 rand. Okay, and then now we need to credit shareholders for dividends, and we also have to calculate withholding tax. So remember that shareholders for dividends is going to be 80%, because remember the question says below the dividends withholding tax is 20%. So we are going to withhold as a company 20% to pay Sars on behalf of our shareholders, and then they will get 80%, right? So it means our shareholders for dividends is going to be 80% of the 10,000. So which means we're going to say open brackets right there, open brackets, and do the calculation. 10,000 multiply by 80 divided by 100. All right, and then let's do that calculation. So 10,000 multiplied by 80, I get 8,000. All right, so we go to the credit side right there, we say 8,000. 8,000 rand. So this is the amount that's gonna go to the shareholders. Excuse me. All right, and then 20%. Please indicate these calculations. They might be having marks as well. So brackets there, 10,000 multiplied by 20 out of 100. So remember, this is 10,000 rand of shares. All right, and then 10,000 rand of dividends, not shares, I mean to say. Okay, sharp. So now you see now. So this is how we've allocated, we've declared dividends. This is how you record the declaration of dividends for ordinary shares. And then we are also, so you can say when you record the narration, I'm just trying to think, remember, no memo, nothing. So yeah, let's try to think, what can we say? So you can say declaration of dividends declaration of dividends to ordinary shareholders. Don't have space, but yeah, we can just say declaration of dividends to shareholders. Right? Or to be more specific, you can just say declaration of dividends to shareholders, declaration of dividends to ordinary shareholders. If you want to be more specific, declaration of dividends to ordinary shareholders. You can just say that, and then we are done with declaration of dividends for just don't know what happened, why this general topic is there. Anyway, technology. All right, and then now we are done. This is how you record the declaration of dividends on ordinary shares. And then let's go in and record the one for preference, declaration of dividends for preference shareholders, right? So let's see. This is how we do it. Remember, on this one, you are going to look at the rent value for the shares issued, Now we are going to number 2, which is going to be preference dividends. Remember, this is for only 15%, right? 15%, because we've got 2. We've got the one for 12 and the one for 15. So we use 15 because it's the one that we issued, right? So when you calculate the number of shares, I mean the dividends for preference dividends, the dividends for preference shares, right? So dividends for preference shares, you're going to use the rent value for the number of shares issued, right? So number 1, remember, we issued the shares that are equal to 160 at the beginning, rent, right? And then we're gonna add the one we issued during the year of 2010. So it means we're going to look at the allocation. We're going to take the amount for the allocation, which is 40,000, because we're going to look at the rent value. We're going to use the rent value this time. We're not going to use the number. Remember, in ordinary shares, when we calculate the dividends, we use the number of shares issued, but in preference, you use the rent value for the number of shares issued. So at the beginning, we issued 160,000 rent value of shares, and then we also add the 40,000 for the shares issued this year, which were remaining shares. So how much are you having in rent then? You have 200,000 rent, isn't it? You've got 200,000 rent, because it's going to be 160,000 plus 40,000 rent. So you've got 200,000 rent. This is the value of the number of shares issued in rent, right? And then I'm just trying to emphasize, don't get me wrong. And then now we get here, we need to calculate what? The total dividends for preference shares. So we're going to use the 200,000 rent for the number of shares issued, multiplied by 15% behind the preference shares. That 15% is for us to calculate dividends with it. So how much is the dividends for preference shares? So 200,000, you multiply by 15, you divide by 100, you get 30,000. So that 30,000 is that 30,000 is for preference dividends, 30,000. All right, and then now when we get here, we are going to calculate 80% and 20% for withholding tax. So dividends, remember, shareholders are going to get 80% of the 30,000, and then we withhold 20% for Sars. So it's going to be 80% or 80 divided by 100. All right. And then how much are you getting right there? Let's see. Let's put that on a calculator quickly. So we are going to have 30,000 multiplied by 80 divided by 100. All right, which is 24,000. 24,000 is going to the shareholders, and then we have to calculate withholding tax of 20%. 20% we withhold for Sars. So 30,000 multiplied by 20 out of 100, and then we get how much there quickly? 6,000, right? 6,000 goes to Sars. 6,000 goes to Sars. All right. And then when we narrate, we can say declaration. Let me just make it clear here, more clearer. Declaration. Declaration of dividends for 15% preference. Just being more specific, preference shareholders. So you can say declaration of dividends for 15% preference shareholders. You are being more specific. Where is this dividends going to? Which are shareholders, right? So very easy. Okay. And then now we are going to make a payment of these dividends. We need to record the payment of dividends. All right. So let's see. I'm just going to add more columns right there. More cells quickly so that we can do the right thing. So when you pay dividends, we're going to pay for both. So we're going to record for both. Number one, let's start by paying these ones. I want us to pay ordinary first. I want us to pay ordinary first. So when you pay these ones, remember, you are going to, when you pay, you let me fix this font quickly. Which font is this one now? Okay, when you pay, you are going to credit this. We are paying ordinary share dividends. I'm just going to do this quickly. We are going to debit these ones. Now copy this one and put it right there. But remember, we are debiting this time because we are decreasing the liability. Remember, shareholders for dividends and withholding tax, Sars. This is Sars. Most of the time they say Sars. Just to be clear, Sars withholding tax, so that we are clear that we are paying this Sars. So Sars, remember, it's a liability. So we debit all of this. Because we are paying, we're going to credit the bank. Remember, the bank is the one that is decreasing this time. So we're going to credit the bank. Because when you make a payment, your bank is decreasing. So you're going to say bank. bank right there. And then bank, remember these ones have to come on the other side. Just gonna cut, paste, just to make things fast there. Okay, and then you come this side, you say you are paying 10,000. Remember, 22,000 for Sars, 8,000 for the shareholders, and then you gonna say paid ordinary. Just trying to be more clear. Paid ordinary share. Ordinary share. Paid, what am I saying? Okay, paid dividends. That's what we must say. Paid dividends to ordinary shareholders. Yes. English. Paid dividends to ordinary shareholders. All right. And then we are done with paying this one. So this is how you record the payment of dividends. And then we can go and pay preference now. Let's go and pay preference. Preference. When you pay preference, I'm gonna do the same. We're gonna copy these ones, but now we are crediting. I mean, we are debiting this and we credit the bank. So it's gonna be copy this one, bring it here. All right, so I'm gonna debit this. Debit. Just trying to show you that this is very simple. So remember, this one must be Sars. Even the other ones up there, you must start by Sars because we are paying this to Sars, okay? Right? And then remember, we credit bank. We credit bank. Because we are making a payment, all right? So let's bank there. Okay, and then remember these two must be debited. Cutting, paste on the other side quickly. All right, and then 40,000. So if you check the payment of dividends, I'm just trying to outline everything one individually so that people can be able to understand your accounting. It's easy, very easy module, all right? But you need to have a better understanding of what you are doing. And then narration, you're gonna say, I'm just gonna copy this one. Just doing copy and paste quickly. So you pay the dividends to preference shareholders. 15% preference shareholders. Then we are done. That's it. Paid dividends to 15% preference shareholders. And then you are done. So it was a copy and paste and vice versa of this, but now we are just gonna credit bank. You see now the total becomes the bank this time around. So I hope this is easy. This is very easy. So remember, payment of income tax, provisional tax, and then when you record the application of shares, you must record the application first, the allocation, and then you refund, and so. So thank you for watching, and I hope this will benefit you. Do not forget to subscribe, like, and share. And if you want to thank me for my videos, there's a thanks button there below, so you can just click there and pay whatsoever they require. I think it's 15-14 rand something. So please don't forget to subscribe, like, and share, and salute.